2025 housing market crash. Why experts are lying to you. The housing market in 2025 is anything but predictable. And that's exactly why you need to be informed. If you've been tracking the market, you've probably noticed some shifts already this year. But what can we really expect going forward? From home prices to mortgage rates, the latest expert predictions reveal a complex picture, filled with both opportunities and cautionary signs for buyers and sellers alike. Will home prices take a dive? Here's where it gets controversial. Many prospective buyers are eagerly waiting for house prices to fall significantly, influenced by headlines suggesting price drops in certain regions. But the full story is more nuanced. While the rapid pace of home price growth is indeed slowing, this does not automatically mean we're on the brink of a price collapse. According to the National Association of Home Builders, National Labor Society, the deceleration is largely due to a combination of factors, like reduced buyer demand and an increase in the number of homes available on the market. Persistently high mortgage rates have cooled demand, and greater inventory has helped balance the supply side, easing the extreme upward pressure seen in recent years. Despite this cooling effect, the consensus among leading real estate forecasters remains that home prices will continue to rise through 2025, just at more restrained pace, an estimated increase of around 1.5% to 2% nationally. This indicates that if your game plan depends on a sharp price drop, you might need to reconsider. To put things in context, current average declines in some struggling markets are about 3.5%, a modest correction when compared to the roughly 20% plunge experienced during the 2008 housing crisis. Moreover, these small dips pale in comparison to the substantial gains we've seen over the past 5 years. Federal Housing Finance Agency FHFA data shows that nationwide, home prices have surged by approximately 55% since then. This means that even with slight pullbacks, the overall trend remains upward, not downward. So the takeaway is clear. Prices aren't crashing, they're expected to grow, though more slowly. And this slowdown varies by location. Some markets may even level off or experience small downturns, while others hold steady or tick upward. That's why working closely with a local real estate expert, someone who understands the nuances of your specific market, is more important than ever. What about mortgage rates? Will they drop? Here's another piece of the puzzle that often confuses buyers. Should you hold off on purchasing, waiting for mortgage rates to fall? The answer isn't straightforward, but leans toward caution. Financial experts, including those cited by Yahoo Finance, warn that a significant decrease in mortgage interest rates this year is unlikely. Current Federal Reserve policies and economic indicators suggest that mortgage rates will hover around where they are now, generally in the mid to high 6% range. This means that while rates might fluctuate slightly, don't expect a dramatic drop that could make waiting worthwhile. If you decide to delay your home search just hoping for rates to plunge, you risk missing out or facing higher costs down the road. If rates hold steady or climb instead, navigating this environment takes insight. Since mortgage rates are sensitive to changes in inflation, economic growth, and Federal Reserve decisions, having a trusted mortgage professional who monitors these trends can help you understand the real-time landscape and time your move as strategically as possible. The bottom line for buyers and sellers: this market demands clear strategy instead of guesswork. Home prices are slowly climbing nationally, and mortgage rates look set to remain elevated compared to historical lows, creating a balanced but competitive environment. It's a scenario of moderation rather than meltdown. Buyers need to assess their personal finances and homeownership goals carefully, rather than relying solely on headlines or hoping for market miracles. Sellers, meanwhile, should be prepared for a market that may not deliver the explosive gains seen in prior years, but still offers solid opportunities for the right listings. In the end, your best move is to connect with a real estate professional who truly knows your local market's pulse. They can help you interpret trends, weigh risks, and craft a tailored plan that reflects your unique situation. What do you think? Are we heading toward a stable market or a hidden storm? Drop your thoughts below. Let's get the conversation started.